Hey everyone, I'm Chris Sommers with Unhedged.
And I'm Austin Hankwitz. Welcome back to another edition of our interesting stock ideas. This week, we certainly have an interesting idea, or a stock that we think is shaping up to be an interesting idea at the intersection of payment processing and emerging fintech. That stock that we're going to be talking about today is Marqeta or Marquetta, I guess, depending on how you want to pronounce it, but the ticker is MQ. So, what is Marqeta? Marqeta is a modern card issuing platform. But what you say that, but what does that mean, right? So if we look around and you look around and see some of your favorite fintech companies, like maybe Coinbase or Square's Cash App, they need, even Affirm, right? A lot of these companies are beginning to, I guess, create more consumer-facing products. These are debit cards or credit cards, and for Affirm, that's the debit plus card. For Coinbase, that's their Coinbase debit card. And for Square, that's their Cash App card. But for these new fintech companies to just sort of jump out of nowhere and say, hey, let's create these awesome, innovative fintech cards, they need to begin to think about that in such a way that's different. Because if you approach a legacy sort of card issuing platform, maybe like Fidelity or a Visa or MasterCard, the problem here with these legacy platforms are they're slow, they're rigid, and they lack fraud controls. So considering these fintech companies are continually innovating, right? We know the Affirm debit card's way not like a normal debit card. The Coinbase card is allowing people to buy with crypto and things like that. It's super innovative, right? So we know these companies are innovating. They're moving at breakneck speeds. They need a modern card issuing platform to help them do that. Insert Marqeta, used by Affirm, Klarna, and countless other BNPL companies, as well as crypto companies like Coinbase and just recently announced Figure Pay, Square's Cash App, DoorDash, Instacart, Brex, Divvy, Afterpay, Uber Eats, Marcus by Goldman Sachs. I mean, this list goes on for another 160 customers that are all household names. So as described in their S1 filing, Marqeta's open APIs provide instant access to their highly scalable, cloud-based and configurable payment infrastructure that enables their customers to launch and manage their own card programs, issue cards to their customers or end users, and authorize and settle payment transactions. To put more explanation around like what this really looks like in practice, they kind of called out a cool 3 examples in their S1 that I'm going to share with you right now. So the first one is with DoorDash, right? So when you order food using DoorDash or groceries with Instacart, modern card issuing works in the background as money moves from the app to the delivery driver's payment card, allowing the driver to pay for exactly what you ordered and nothing else. When you buy a big screen TV and pay for it in installments using Affirm or Klarna, modern card issuing helps move money to the payment card that Affirm or Klarna uses to seamlessly pay the merchant. And finally, when you receive money from your friend through Square's Cash App, modern card issuing helps move the funds to your debit card, making it instantly available for you to make purchases. Right. So and I was like trying to think about different ways that I can describe this company to people. And at its core, the easiest way to describe this, in my opinion, is like they're democratizing access to card issuing technology. So how does Marqeta make money? Marqeta makes money by collecting a small fee on the total processing volume of all the transactions that it enables. In the company's own words, in their S1 filing. In addition, our usage-based business model provides a win-win for both our customers and us. As their businesses thrive, our net revenue also grows. The strengths and durability of our customer relationships are evidenced by our year-over-year net revenue growth of 103% for the year ended December 31, 2020, and our dollar-based net retention rate of over 200% for the years ended 2019 and 2020, which to me are pretty crazy numbers. Still talking about numbers here with the total processing volume. Year to date, the company's processed 50.5 billion, that's $50.5 billion in total processing volume, netting them a whopping $230 million, again, year to date. This is a year-over-year increase of 110% and 95% respectively. The company has a massive total addressable market with 2020 US card-based processing representing $6.7 trillion in payment volume, as well as the $30 trillion in payment volume worldwide. And I say worldwide because Marqeta is currently operating in 36 countries and regions around the world, and I don't exactly see this side of the business slowing down anytime soon. So with growing the business, right? So as it relates to growing their business, Marqeta will see massive tailwinds given the transition to and the rise of digital wallets, the rise of buy now, pay later, as well as laying in new cohorts for their existing customers, right? I mean, their net retention rate is 200%. It's crazy. But there obviously, with every investment idea comes risks, and there are some certain call outs here that we need to make with Marqeta. So the first one is Galileo. This is a recent acquisition of SoFi, and it's their key competitor, in my opinion, in the space. They launched Galileo Instant in 2020, and already 1,500 businesses have signed up to access the solution that allows them to launch debit card programs. Some big customers of Galileo are Chime, Robinhood, Vero, Paysafe, and Revolut. And other really big risk is that Square is a massive customer of Marqeta, representing a majority of the company's quarterly revenue this last 3 months. Considering the company announced they've expanded their partnership with Square, though, in their recent earnings call to now include powering Square's bank solution, I'm not sure that this massive chunk of revenue, like that percent of revenue, will decrease anytime soon. But to call out a few ways that it could decrease, and I think I read that the besides Square, the top 5 revenue driver, the top 5 companies increased as a percent of revenue. I think it was like 256% or something, Chris, here recently. But to call it a few other ways that they could decrease Square as a total percent of revenue they've extended their partnership with Affirm through 2024. We saw Affirm launching their Affirm debit card, and they've also entered into a partnership with Google to empower new virtual Google Pay, the Google Pay virtual cards. So very cool. And then finally here, not a risk, but something I thought was interesting to call out. They've hired a couple new people. So they've hired Darren Mowry as Chief Revenue Officer. He previously led AWS expansion at Amazon for the last decade, and before that was a director at Microsoft. And they hired Randy Kern as Chief Technology Officer, who spent several years of his career building for Microsoft in Salesforce. So, I think Marqeta has an incredible first mover advantage, but, it's not perfect. There are certainly some holes to poke. But I do think Marqeta is selling the shovels to the gold mining fintechs, doing everything they can to innovate and expand their service offerings for their customers.
Thanks, Austin. That was a good overview there. Let's look at some numbers and a little bit of the company's history. So
let's do it.
The company was founded 11 years ago in 2010, and the CEO is also the founder, and he's technologically savvy. On Unhedged, if you go to the Marqeta homepage here, you can pull up a lot of tweets to see what people have been saying about it. And that's kind of where I saw the background on the founder-led, technically savvy person here, right here from this person. Getting into the numbers. So Marqeta went public in June, and they raised just over $1 billion. And today the market cap is around $14 billion. And when you look at the numbers, this is the conference call. They're talking about the long-term gross margin targets of 40 to 45%. Let's take a look at the 10Q, the quarterly report. Austin kind of did a nice high-level cursory summary of that. So if we look at the income statement here, they did $122 million of revenue in the most recent quarter, $230 million year to date. So they'll do a gross profit this year, probably of around a couple $100 million. Note the comp and benefits line. The big spike there includes a lot of IPO-related comp expenses. So that should not stay that high. So when you think about the numbers here, if this company's growing in the high double-digit percentages on a top-line basis, and they can do 40 to 45% of gross profits, you figure they'll do around $500 million of revenue this year. They could approach $1 billion next year. You're looking at around 400 to 500 million of gross profits. So it's trading on that basis just around 30 times next year's gross profits, which in this market is not that crazy, especially if they've got a long runway for growth. Now, as Austin pointed out, they do have some competitors, and they do have a couple issues. Slide 24 of the IPO deck here shows Stripe, who's a very formidable competitor. They're newer, but they've got great APIs and open documentation like Marqeta. Galileo, which was just purchased by SoFi. It's not quite as open, but they've been around a while. And these are the legacy guys who Marqeta is taking market share from, of course. So the opportunity is big. Another issue is Square is 70% of their revenue. It's been in the 60 to 75% range for all of the disclosed history that you can read about in the prospectus. I'll pull that up quickly. So if you go to the Unhedged website and go to filings, check mark prospectus, you can read the IPO prospectus on here. I've made some highlights in here. You can view them and click through them, including risk factors. But the relationship with Square seems sound. Square's growing like a weed. They're tightly integrated with Cash App. Cash App's growing very quickly too. So provided they continue to sign new business and existing customers keep expanding, guys like DoorDash, and they just signed, by the way, in the second quarter, Google, which is a big win. Google Pay will now be using Marqeta. They announced one or two big acquisitions of customers like that over the next 4 to 6 quarters, and that money starts flowing in. This is probably going to be a very successful investment.
And I think what's interesting too, it's like they're not just announcing and adding in these really big, heavy hitter partnerships, but they're expanding them as well, right? A firm just said, "Hey, we want to extend our partnership through 2024," right? That's pretty impressive in my opinion. I mean, if you're going to work with them for so long and then just kind of feel out and say, "Hey, this is a good company. We like them so much that we want to expand now for the next 3-4 years." That's great. Now, hopefully we see that, with Google and some other, big heavy hitters as well.
Yeah, definitely. And, it's interesting. I guess they were the first to market. They believe they've got a big first mover advantage. It sounds like Stripe is starting to get in there. Galileo, of course, with SoFi. But the relationships they're signing up are big, and they talk about it on the call, the second quarter call, which you can read under the transcript section here. Generally, they've just got a lot of tailwinds, and the market is so enormous, which they show in their slide deck somewhere in here. Let me find the slide here. So they're only doing 60 billion of processing volume last year. So you can see how tiny that is relative to the size of the market. They're international too. They're in over 35 markets already, and that's growing as well. So yeah, I think if they can continue to put up high double-digit growth, win big business accounts like the Googles of the world, they've already got Uber, of course, and then they've got DoorDash and Square, etc., Instacart. I mean, the growth here is very, very large opportunity for them.
Definitely shaping up to be an interesting idea.
Yes, awesome. Well, thanks a lot, Austin, for bringing this one to my attention. I hadn't heard about it. Austin mentioned it to me, and used Unhedged to do some research on it, read the prospectus, quarterly report, most recent transcript, and the investor presentation. That's generally a good start to get up to speed on a new investment opportunity.
No problem, man. Can't wait to see it again.
Awesome. Thanks a lot, Austin.